Hang Seng is seeing the largest gain right now. It's up 1.7%, so over 300 points in terms of a gain for the Hong Kong markets.
The company has informed the exchanges of them purchasing Metro Cash and Carry's India business.
This idea that everybody must suddenly start to mask up is, I don't think, completely appropriate.
The bid has come from an ARC along with an investor.
Bank Nifty is up 270 points, so good start for the market, in line with what the SGX was suggesting.
Investing is more about 90% is about the emotion, and your emotion gets tested.
We have a fantastic journey ahead. Wine is growing faster than whiskey.
We had a gap up opening. The Nifty opened above that 18,300 mark, but from that level, it's seen a fall of close to about 200 points.
The hawks are outnumbering the doves at this point in time.
A large block deal of almost 4.56% stake was likely to change hands.
Markets still down. There is a mild recovery that we've seen from the lows above that 18,100 mark.
Okay, the last act in the day so far playing out, and I think it's a fresh leg down, 50-60 odd points lower is what we have. You're with us here on a fresh new edition of Closing Bell. With me, my colleagues Rima and Mangalam. Guys, hi, good afternoon. Just take a very quick look at a few things. One is the day so far, right? I mean, just numerically quantifying the volatility we've seen, we got a 118-point move up at the gap. It was not a gap up straight to the day's high, but it was 118 points worth. The initial move higher. The day high was made there. Then you had a 245-point sell-off all the way to the low point of the day at about 18,070 or so. And from there, we've seen a 100-point recovery, which is in the process of being sold into now. Maybe need to add one more point if there's space there by 3:30, but it's just absolutely volatile. Now, I just want to put out a chart. This is the daily Nifty chart, and what you will see is a rising trend line all the way from the lows in June 17th. There's a touch point. Can you see the trend line? I think we can see the trend line. There's a touch point on the 30th of September. And then basically today, the market touched that, broke that intraday by 10 points, and then has bounced off that level. These are simple trend lines, and lots of stocks, not just Nifty, on Market Laser in the mornings, I've been highlighting other stocks as well, which are basically testing exactly this one, the rising trend line from the lows of June. We've seen a test today on the Nifty benchmark as well. So, it's not looking all that great. To add to all of this, the point is we are, at least for the last 5 or 6 sessions, been making lower lows. Every low, the day is lower than the previous day's low, which is technically a sign of weakness. I want to wrap this up with slightly positive data if I can. The fact is that the market is coming off, but it's not really going all the way, right? It's not a unidirectional kind of move. It's exhausting itself. The move in one direction exhausts itself, and then we go on the reverse side. This is data for the last 6 years, and what basically happens towards the end of the year. Around this time, December 22nd, December 23rd, as you will see on the screen, move higher starts. And this has been true for 6 years now. The data, the gains vary. I mean, the lowest on your screen is 1.6% in 2019, so you could say it's flat, but more often than not, it's higher. And at least over the last 6 years, it's never lower. This is, as I said, beginning around this time, December 20th or so, 21st, 25th, all the way into January 15th, January 20th. This is basically the end of the year moves into the new year. So will we see this is the question. Of course, it's unknowable at this stage, but history does suggest that around this time, the market does see a bit of a bid, whatever the reasons, but it does see a bit of a bid, so we'll watch out for that. Brima, hi. Mangalam, hi.
Hi, we will most definitely watch out for that. They say history rhymes if it does not repeat. So will there be that Santa Claus rally in the next few days or not? But, the thing is that today, we're off lows and off highs. Everything's happening. Like you said, there is a fair amount of choppiness, volatility. The interesting bit is if you just take a look at the line chart of the Nifty, every time there has been even a mild attempt higher, that has been sold more vociferously. And now this time, the recovery from the lows has been strong. So to that extent, the last hour will be crucial to watch. To add to that, we have the weekly options expiry as well. And the VIX has crossed 15. So that means a lot of option writers are waiting for some more choppiness for them to make their money in the last hour of trade. The Nifty Bank, there is clear resistance at the 20-day moving average. Yesterday, it broke below that after holding on to it for a fair amount of time. And now that it's broken on the way up, this will be a bit of a resistance, and that's what the last hour showed as well. For the Nifty, it was behaving, while it was volatile, it was behaving in the range of, both the 50-day moving average at the lower level and the 20-day moving average at the upper level. Now, today as well, intraday lows have seen some recovery, and the Nifty, as we speak, is at the 50-day moving average of 18,144. On the way up, of course, there is a fair amount of resistance. So I think if you had to narrow that range further, or rather, give some more color to that range, in terms of point to point, yesterday's high of 18,463 and today's low of 18,069 is something that we will monitor in times to come, at least in the next few days. As far as options action is concerned, 18,200 and 18,150 call writers are extremely active. They don't believe that the Nifty can go past that 18,200 mark. And at the lower level, now that there has been a recovery, 18,100 put writers, the bulls, have found some support. So out there, we've seen some open interest addition. And the 18,100 put currently, as we speak, has a couple of shares in terms of open interest with a premium of 100 odd rupees. So that's telling you 18,000. The psychological mark has, some protection and some support from the bulls. Rima, what do you have?
Interesting data there, Mangalam as well as Prashant. Let's hope for that Santa Claus rally. It's not come so far. Things are looking a bit uncertain. Right now, there's a fair amount of sell-off that you are seeing in the broader markets. Look at the Nifty small cap index. That's down 1.4%. So although the benchmark indices have recovered and are just down 0.3%, the advanced decline ratio is quite weak. One stock in the green for nearly 6 in the red. So if you look at the NSE picture, we've got nearly 2,500 stocks currently trading in the red. So that's a pretty dismal picture. But let's tell our viewers what we've lined up on closing bell today. Bandhan Bank slips after a planned transfer of bad assets fails to enthuse investors. More details lined up on the show. REC is buzzing in trade in an otherwise weak market. What's gotten the stock excited? Details on the show. And on the back of the recent COVID resurgence, several pharma and diagnostic stocks are in focus. A roundup of all the stocks in focus coming up in just a bit. And we'll talk all things stocks and market with Vaibhav Sanghvi of Avendus Capital Alternate Strategies.
Okay, well, how should you position yourself in the last hour of trade? What should you be doing, if anything? Mitesh is with us with that. Mitesh, hi, it's a tough one.
Good afternoon, Prashant. Very tough. But a couple of important things, which technically I would want to highlight. You were talking about the trend line, which was acting as support for the Nifty. So I think around 18,100, give and take broadly there on the manner in which you've drawn. I think that's the key level to watch. You also having data about December. Now, if you look at the last 3-4 Decembers, we've never had a situation barring the COVID year that the 10-day average has crossed below the 20-day average, which actually happened day before yesterday on the Nifty chart. So I think in the short term, 18,400, which is where the crossover took place, and both the averages are nearly placed over there. Till that has been captured on the upside, I think I would rule out any kind of a strong Santa Claus rally. There can be bounce backs from trend lines. That's possible, but I think a strong rally will happen only if we start getting past 18,400. Also is the fact that the indicator position is not very comforting or not very strong. So I think this will be a week or next few days where it will be choppy. Of course, if we start closing below 18,100, then I think we'll see clearly more declines and more supply pressure coming in. But otherwise, it could be a very choppy range of 300 points, broadly between 18,100 to about 18,400. With that, I think, the trading is more stock specific focus, and my bias has been slightly on the negative side given the indicator situation. So I've been using rallies to sell into on the indices. But on stock side, I have one buy and one sell. Jubilant Foods, I think, is trying to make some kind of a bullish pattern on the hourly and the intraday charts. That's a buy. Keep a stop below levels of 524. Look for targets of 550 to begin with. And Voltas is on the sell side. The stock appears to be breaking down, making a fresh low. That's a sell with a stop at about levels of 820 for targets of 775.
All right, take that point. In a weak market, Jubilant Foodworks doing well. That's primarily on account of the announcement that they've made a couple of days ago. The fact that they will now launch pizza delivery in 20 minutes as against 30. 30 minutes was a game changer. Can 20 minutes lead to them, selling more pizzas and obviously rush out competition as well, as people will order more because it's available in less than 20 minutes. This is something that we'll obviously monitor as the plan rolls out. But the other stock in focus is Bandhan Bank. Slips after a planned transfer of bad assets fails to enthuse investors. Abhishek joins in with more details on this one. Abhishek, what went down there?
Well, Mangalam, as you mentioned, it has failed to enthuse investors on the same. So they have return of portfolio which will be given to the ARC, that is Asset Reconstruction Company. Now, bank has received binding bid of about 801 crore on the security receipts. That is about 9% of the total portfolio size. So this is for the return of portfolio worth nearly about 8,900 crore, which is entirely made up of the individual loans. So this 9%, as per various sources, is on the higher side, given the fact that previous deal against a peer has happened at 3% in terms of the return of amount. So banks shall go for bidding process as per the Swiss challenge method. Now, analysts on sources do tell us that bid has come from an ARC partnering along with an investor. So the bid is likely to have come from a big lender as well as its ARC arm, that is Asset Reconstruction Company arm. So board meet will happen next week to get an approval for the same, and hence after that we'll come to know the name of the ARC as well as the lender. Back to you.
Abhishek, thank you very much for that. Devin, this event is positive for the asset quality improvement of Bandhan Bank, and according to brokerages, there are more such NPL recovery events which are lined up, but yet the stock is under pressure, 4.5%. What explains that?
So, Rima, my understanding is that you are receiving only 9% of the amount, I think, which you lent in the process. I think that would raise many questions about, I think, the lending that the bank has been doing and the due diligence checks that they've been applying. Because in a recovered market situation, even if you are not recovering, I think, a 30-40% kind of an amount, this means that I think the question would be raised on how the practices are as far as I think the lending is concerned. And that is where probably I think the market has not given the kind of a look to this particular transaction. And I would think that I think this is where it is going to remain as a overhang going forward as well. So let's see how exactly it works. But I think more important question, I think given the kind of market at this point of time in which the buoyancy is experienced, the lender should be having reasonably high amount of growth and lower amount of NPS. Here the situation is possibly not coming under control as much as I think one would have liked it to be.
The market breadth, by the way, today is particularly bad. You got some 5:1 in terms of advances to decline ratio. We've not had this kind of number for a while, for a long time, and the advance decline crossed over early and has not looked back since. Very, very steady with almost 5:1, 6:1 kind of advances to declines ratio. Now, diagnostic stocks have been in focus, but they've also seen lots of price reversal. Look at Thyrocare, for example. Thyrocare went up 15% yesterday. In the morning, it was up another 7-8%. It's down 8%. It's basically a 16% reversal for Thyrocare from the day's high today. But what's happening here in this space? Ekta is here with a quick roundup. Ekta, hi.
Thanks for that. Well, yes, the larger theme of COVID-19 seems to be playing out. So we're just picking out a couple of stocks which have in the past been, in fact, impacted by COVID-19 positively. So I'll start, for example, with Wockhardt, which has seen a large amount of volume action in today's trading session. They do have a contract with the UK government for supplies of the AstraZeneca COVID-19 vaccine. Other vaccine-related stocks include the likes of Dr. Reddy's, Zydus Life, Biocon, Pfizer. Divi's Labs has in the past been in focus on account of their supplies of the Molnupiravir API or intermediate. Cipla and Zydus Life as well, they had one of the largest portfolios of COVID-19 related drugs in India, and other COVID-19 related drug stocks included the likes of Gland as well as Alembic. Now, diagnostic stocks, as we've been addressing, have been in focus on account of hopes of higher testing. Now, however, what we have seen is that COVID-19 related opportunities have dwindled for most of them. For example, if you just look at the commentary, Divi's Labs said there was a slowdown in projects related to COVID-19. Wockhardt, their UK first half revenue was 422 crores versus 794 crores year on year. Cipla, Q2, the indicated demand for COVID-19 drugs had become negligible. Gland Pharma sales were impacted because of the absence of COVID-19 related drugs on a year on year basis. Diagnostic stocks, COVID-19 related testing has fallen anywhere between 84 to close to 97% on a year-on-year basis. And And this time round, COVID-19 is not expected to be the same as well. We might be more resilient is what experts say. That is because we have hybrid immunity, which is a combination of natural immunity due to exposure as well as vaccinations. And a large amount of the adult population, in fact, is vaccinated with at least 2 doses. There seems to now be a larger understanding in the market about this, because as we saw diagnostics stocks run up yesterday, they have now come off in today's trading session. We had the likes of Thyrocare, in fact, mention that they've not seen any rise in the COVID-19 related testing as of now.
Ekta, thanks very much for that. Look at the market go. Oh, wow. Boy, 100 points lower, just like that. I mean, butter, knife through butter, right? Hot knife. And we're basically back at that trend line, just like that, almost there. We're at, what, 18,106, and, you know, the low was 18,070. The touch point is slightly higher, but just about 15-20 points away. And this has happened very, very sharply, very, very quickly. It's on your screen now as we speak. Devin, of course, is still with us. Devin, you know, these path lab companies, I don't know if you have a view, but the extent of damage in broader markets is pretty large, very, very large. So just a few other names. Deepak Fertilizer, for example, a big 6% cut. These fertilizer companies are all other fertilizer, Fact, RCF, NFL, all selling off. Garden Reach, defense name, selling off some 7-8%. You know, I can spot Godfrey Phillips down 6%, GIC Housing down 6%, and big volumes on most of these names. What do you make of this, Devin?
Understand, they have been carrying the positions by some of the large HNIs and the traders and the operators, where they have created a leverage position into some of these counters. In my viewpoint, I think given the kind of fall in the market and the uncertainty around, they are the ones I think who are basically trying to offload their leverage position, and that is where I think you are seeing a sharp fall in some of these cash market counters, I think, which are basically, I think, having the larger amount of pressure on the stock prices. I don't think that, I think we are talking fundamentals on the companies which are in defense, and I think they remain as strong as they were before, including in the garden, which you have mentioned about. But the point is that I think the larger position is being offloaded, largely because of the deleveraging that's going on currently at this point of time with some of the HNI investors, I believe.
All right. You know, I don't know whether you track Huhtamaki India. It's not a stock that we you know, talk about very often. The reason why it's swum into my ken right now is because in a market like this, it's a stock which is up 11% It's surging, and at the same time, the volumes are picking up on that one as well. Almost 5 times the average that we've seen on that counter. Your thoughts on this one and the industry?
So honestly, I think I'm not tracking this particular company, so I won't give any specific view on this. But currently, I think in some of the smaller companies, what we are observing, there is the requirement, inorganic activities are basically happening around. And as a result of which, I think sometimes a sharp price along with a change of hands do take place. That could be one of the possibility, I think, that as I see it. But honestly, I think since we don't track it, so would be refrain from putting across any views on this particular company.
Do stay on. Welcome back. Hovering around 18,100 on the Nifty. We're down close to about 0.5%. Bharti Airtel, Reliance Industries, as well as the HDFC twins. These are the stocks which have lost ground in the last 30 minutes. On the flip side, gains coming in for Ultratech Cement as well as HDFC Life. But another stock that we're tracking very closely is REC. Now, Chris Wood of Jefferies has made several changes to its long-only equity portfolio. Nimesh is here with the details. Nimesh?
Hi, Rima. So, REC is buzzing in trade in a weak market. That stock is up 2% as Chris Wood has added the stock to the India long-only portfolio with a 4% weight. And what is more surprising is he's put that 4% weight by reducing weight in some of the blue chip names. So, he's reduced 1% each in HDFC Bank, in Bajaj Finance, in ICICI Pru Life and ICICI Lombard. In all the 4 stocks, he's cut the weight by 1% by adding REC. Even in the India, not only in the India portfolio, but even in the long-only portfolio, he's removed Bajaj Finance by cutting the weight by 1%. What is interesting is this is the 4th PSU stock which has got added to the Chris Wood's India long-only portfolio. He already has ONGC with a 10% weight, followed by SBI with a 6% weight, now REC with a 4% weight, and he has Concur as well with a 4% weight. So the PSU weight is going up for Chris Wood as well. In fact, that's the space which is buzzing off late. We saw a big rally in 2022 in the PSU bank stocks, and now that's getting rub off into the PSE stocks as well. So the entire PSU basket is in focus, but REC is in focus today as Chris Wood has added into the India long only portfolio with a 4% weight.
Interesting data there, Nimesh. Thanks a lot for that. As we speak, however, just keep an eye out on all these fertilizer stocks. The fertilizer stocks have been buzzing around quite a bit over the last few trading sessions, but now all those gains have been given back. So something like an RCF, currently at the low point of trade, selling with high volumes. We have a bunch of others as well, Chambal Fertilizers and NFL Nagarjuna Fertilizers, all of them currently sitting with sharp cuts. Devin, your thoughts on any of these fertilizer stocks? I mean, everyone was hoping for some better policy coming in from them. The fertilizer secretary spoke to CNBC-TV18 as well, and they were hoping for the Rabi crop to really do well for them.
Well, on one side, I think the cost of feedstock has come down, and I think that's a big breather for most of the fertilizer companies. And that should possibly, I think, help them in protecting the margin in coming quarters, if not, I think, in earlier quarters. That is a theory on which most of the fertilizer stocks probably moved up in last few days. And I think the trading position was created by some of the traders in the market. I believe, again, I think in line with the market sentiments today, I think the deleveraging part has started happening for those trading positions that was created. And that's the reason for which I think many of these stock prices are down. I still believe that the fundamentals are shaping up relatively better compared to what they were in previous quarter, as far as I think the fertilizer companies are concerned. And that should get validated. Should the crude oil price remain in this current levels, I think that should get validated on the profit margins going forward in subsequent quarters.
All right, Devin, we'll leave it there. Thank you very much. Good speaking with you. Appreciate you joining in with that. Vaibhav Sanghvi is now joining us, co-CEO of Avendus Capital Alternate Strategies. Vaibhav, great to have you with us here. Thank you very much. You know, you run a long short portfolio, so you kind of can maybe explain this better in terms of how one should navigate this volatility. If you're trading, if that is what you're doing, Vaibhav, and just immense, right? Although somebody was pointing out, and I put this out, that from the intraday highs and intraday lows over the last 5 sessions, we've had on an average 200-point moves, right? But that is 1%, all said and done. It just feels like there's a lot going on a daily basis, which I think there is. But your thoughts on how to navigate this volatility if you're trading?
If you're trading, to be very honest, in a market like this, where the relative volume is kind of lower and is expected to be lower because of the second fortnight of December, and usually you will see that the FPI participation also kind of goes down. My suggestion or my recommendation would be to rather not trade, because these movements, what we may probably see, may not kind of actually indicate the direction of the market. Having said that, we did expect that the markets to kind of consolidate, and that is what we are kind of witnessing. And everybody is kind of anticipating in terms of 2023, in terms of how the economy and the earnings are going to pan out, which is where the market would be focusing their energies on in terms of making the next move in terms of money making.
Vaibhav, afternoon. Can you tell us your long ideas, your short ideas? What is the ratio of long short in your portfolio now?
See, in terms of our view or on an overall basis, while we are we are in the camp that at this point in time we are looking for some amount of consolidation, and when there is kind of consolidation and intermittent turbulence of volatility, relatively we would probably go a little lower on the exposure as compared to a longer term averages, and that is what we are currently doing. Having said that, as I said, we are waiting for January to come in. We'll have pre-budget expectations and the earnings kind of flow in, which we do think that will give us an opportunity to kind of increase our deployment and turn constructive on the market once the global things kind of stabilizes.
Hi, Vaibhav. I was going through your report and your views. 2 things really stood out for me. The first one, you said that in the next year, one can expect transition from low PE value to high PE growth. That was extremely interesting because this year, the kind of stocks that moved, they were all low PE value, be it PSU banks, etc. High PE growth is where you expect some transition to. And secondly, you said while equities are likely to be volatile, returns are likely to be reasonable. So two-part question here. How do you define reasonable? What kind of returns can one expect? And secondly, high PE growth. What sectors are we talking about here?
Sure. So I think what we do believe is basically that because of the correction in the commodity prices, you will see the transition of earnings from commodity producers to commodity consumers. And when we talk about commodity consumers, it will cover the span of probably infra players, probably consumers, consumer staples, and to some extent consumer discretionary as well. So if you see, all these segments are the segments where the relative PE from a market standpoint is higher. So what essentially we are saying is that we will see the transit of earnings, I don't know to what extent, but from low PE stocks to higher PE stocks. And in effect, the effect of that on the index is basically that we may not see a pretty sharp correction on the index per se, right? And a headline index, may turn out as people would get surprised to see to that it continues to perform going forward as well. So to the second part of the question, what is the kind of returns which we can probably see? My sense is basically that this year or 2023, we will see a return or a year where debt and equity both would probably perform. Debt primarily because you will see that capital appreciation happening once we see the terminal rate, determined. And the second part of the year is when we see that all of the negative aspects of lower earning forecasts, higher interest rates are factored into the market, and we'll see equities kind of rebounding as well. So by the end of the year, we may still see a 10 to 15% rise probably on the index as well.
Okay, 10 to 15% rise on the index. But that's the second half story, right? For the full year, but bulk of the gains coming in the second half. First half, still you're expecting to be tough?
I think first half is going to get more of headlines in terms of slower growth. Corporates kind of tightening the screws in terms of cost-cutting measures, and we'll see that the earnings kind of forecast getting downgraded by the street and the analysts globally, not only in India. In that wake, I think once the economic growth kind of starts coming down, we will see that level of volatility probably inching up or coming into the market. It may be very temporary, but I think that is a period where there can be one kind of one crack probably on the index, but that's about it. And post that, we do see that smart recovery kind of coming in, and as the Fed or probably global monetary policies kind of start easing, is when we'll see things getting better for the equities.
You said that you will consider investing perhaps in January when pre-budget options also open up investment opportunities. Can you tell us typically what are the pre-budget opportunities? What should be on investors' radar?
From a pre-budget opportunities, I think as we see currently, of course, rural-focused companies, rural-focused kind of theme, apart from the infra players and banking is something will continue to perform. So that is a space where you will, on declines, probably you will see some amount of interest, coming in as well. The only joker in the pack is basically how the taxation measures kind of pan out in the budget, which is anybody's call, to be very honest.
What's the best time to start loading up on these pre-budget opportunities, the rural infrastructure names that you spoke about?
Not specifying the names, but I would say that staples is something where you will start seeing good amount of momentum in terms of the volume growth. At the same time, you will see the benefit of the commodity prices kind of easing off as well. In addition to the overall optimism that rural, because the Rabi crop is going to do well, and governments will continue to do some kind of measures to augment the rural sector. So that is a segment which we do think from a pre-budget perspective as well, and over the next 6 to 12 months is a segment where you can see some more good outperformance.
Right. Weber, from an asset allocation standpoint, you said that both debt and equity will do well this year. At what point do you expect, central banks to actually pause the rate hikes, and at what point growth concerns come to the fore? And to that extent, what kind of expectations do you have from debt instruments?
So in my view, I think we are closer to the terminal rate, probably in a quarter's time or something like that. I think we should be there. And post that, there is a possibility that we may see some amount of plateauing of rates, and then probably start seeing towards the back end of 2023, kind of rates start to come off. However, market being market, they will always try and discount it 12 months ahead in terms of what is the likely course of action in terms of the interest rate. So if you see US 10-year also from a high of 4.25 is now close to about 3.6, 3.65, right? So even though the rates have kind of gone up, the US 10-year is not reflecting that. And the inversion, the way it is showing that we may see that rates coming off in probably late of 2023. Whether it happens then or earlier, it's just it's a call too difficult to take. But overall, on a directional basis, one that the bigger component of your money making in debt would be more from a capital appreciation rather than a yield.
Okay, Weber, we'll leave it there. Thank you very much for your time, and appreciate you joining us here on CNBC TV18. The markets, holding. I mean, it's not breaking or breaking down into fresh lows or anything. We're down 80 points, which of course is, as compared to where we were, say, at about 215, 220, still worse off. But we'll see. 18,121 on the index. We'll take a break, a quick one. And as always, we'll get you a check on what dealing rooms are talking about in our segment D-Street Chatter. Nimesh joins us for that. A little later, a technical expert comes back. We'll get you buy today, sell tomorrow trades with our experts. Stay with us. We're back.
Welcome back. Even as there is weakness across the board, there are a bunch of stocks which are doing extremely well. IRB Infra is the one that should come up for you. In fact, it's up 9% from lows, currently moved to the high point of trade. And this at a time we have 2,500 stocks declining for just about 400 advancing. And in that, IRB Infra really stands out. In fact, was one of the gainers in recent times as well. Is there a story around that? What are the dealers saying in the market about today's move? It is our favorite segment, D-Street Chatter. Nimesh, what are you gathering?
Hi, Mangalam. So, if you look at the markets, every intraday pullback got sold into.
Yes.
That explains the kind of sentiment which is there in the market. And my sense is the fall is largely a long unwinding rather than big selling from the larger FI. So that's the overall feedback that I'm getting in. In fact, there's going to be a small market at close basket buying at a leading FI desk. Okay. So that flow still seems to be quite strong in select pockets. The underperformance in the mid cap and small cap is something that explains that there is a lot of unwinding now. A lot of margin calls got triggered in the first half. That's the overall feedback as well, and that's the reason why all the outperformers of late are seeing a bit of underperformance now. So clearly, the retail and HNI panic seems to be setting in the broader markets. That's the overall feedback. Technically, the levels of 18,100 is something which is very important support level for the Nifty. And I think that's what the bulls are trying to defend today. But again, the whole point is if that's taken out, then 17,800 could be the next level to watch on the Nifty purely from a technical point of view. But to sum up today's trade, I guess it's more of long unwinding, and that too from retail and HN investors in the broader markets. But it's not a large sell-off or a big panic selling from the large institutions. That's the overall feedback.
That's great insight, Nimesh, because, as we speak, we have a lot of these PSU banks which did extremely well. Union Bank, for instance, currently at the low point of trade has corrected about 8% from the highs. And from the recent highs itself, it's down, 21-odd%. So, yes, we all talk about the rally, but the PSU index itself is down about 10% from the highs. Individual stocks, what do you have now?
Well, so in terms of individual names, the first stock on the list is NDTV. That stock also has corrected sharply off late. In fact, it's down 25% from the recent highs, in line with most of the other mid-cap and small-cap stocks. But now I believe there's going to be a large block deal in NDTV very soon. Most likely it's going to be an inter-se promoter transfer. So nothing much to read into, but there's going to be a large block in NDTV very soon. That's the indication. So that's the first one. The second stock is Adani Ports. Again, that stock has cooled off of late, like 5% down from recent highs. But now, I guess at these levels, some bit of buying interest is back. So small buying interest at the leading FI desk in Adani Ports today. So that's the second one. The third stock is Infosys. Within the overall IT names, Infosys is the only stock where there is a market close basket buying at a leading FI desk. So among large cap IT names, this stock stands out purely on back of buying interest. So that's Infosys in today's trade. And the last stock is HDFC Life. Again, this stock has been seeing a lot of consolidation of late. But the overall feedback is for the last many days, there is accumulation happening in HDFC Life from a leading long-only fund. So every now and then you will keep hearing about good volumes, delivery-based volumes in HDFC Life, and a leading FI is an active buyer in that particular stock.
All right, Nimesh, thanks very much for that. So that's a list of stocks we'll watch out for. Mitesh is back with us with his BTST ideas, short-term trading ideas. Mitesh, what do you have?
Prashant, one buy and one sell side call. ICICI GI is holding out very nicely, and the overall setup is also quite positive over here. So that's BTSP. Keep a stop below 1233. Look for targets of 1255, 1260 for tomorrow. And Delta Corp is on the negative side. That's STBT. STBT call. Take a stop at about levels of 210 half and a target of 203, 204 for tomorrow.
Could you just repeat the trade for Lombard, Mitesh?
Sorry?
For ICICI Lombard, for ICICI GI? Could you just repeat the trade? Yeah.
Sure. That's a long side trader, BTST kind of a call. I would recommend a stop at about 1233, 1234 and a target of 1255, 60 for tomorrow. I think once it starts getting past 1260, you will even see higher levels coming in, but that's the hourly pivot, so that's the target for tomorrow.
Mitesh, the market breadth is an important indicator always, and today it is actually deeply in the negative. Declines outnumbering advances, broader markets basically. That adds to the overall concern short term?
It does, Prashant. I think, as I said, the negative crossover of averages, the position of the indicators, the breadth, the way the mid-cap sector is reacting, and the fact that the bank nifty also started trading below 42, 800, 850 zones. I think overall adds that there should be more corrective activity and pullbacks will get sold into, like we saw one in the morning. The only thing which we have highlighted is the nifty trendline support level. So not going aggressively short, we're still, trading with call option short positions. But if we start closing below 18,100, then buying into put options or selling futures directly will definitely be something to be explored.
Okay, so go short if the Nifty breaches 18,100 on the way down. Mitesh, thank you for that. Sudeep Bandopadhyay, the Group Chairman of IndiTrade Capital, is now with us on the show. Sudeep, what have you made of this weakness that we've seen over the last 2 days?
Well, I think, market did go up quite a bit. And after that, a little bit of consolidation is par for the course. Remember, the geopolitical environment hasn't really drastically improved as far as the world macros are concerned. The resurgence of COVID in China has also created some confusion amongst the investors and has affected a lot of categories of stocks. So overall, I think a bit of caution, bit of profit taking, bit of consolidation, I think is a combination of all that. And of course, add to that the year-end factor where the interest in trading amongst global investors anyway reduces. So I won't read too much into this correction. And I will not really get into a pessimistic scenario thinking that markets have started correcting in a big way. I think I will put it to predominantly year-end phenomenon. Today's Indian market reaction, in spite of US market having moved up, Asian markets, most of the Asian markets showing green, I think is an overreaction on the COVID front based on what the government meetings and things like that. But by and large, the opinion coming, and even in your channel, categorically the experts told that there is absolutely nothing to be afraid of or change as things stand today. So I won't really panic with this selling. I will rather look at buying into some of the stocks, getting this opportunity.
So let's talk about those buying opportunities itself. Sudeep, what are you looking at? What sectors, and if you can, specific stocks?
Mangalam, I think one of the stocks you just discussed 5 minutes back, IRB, I've been talking about this stock for some time. And I think, infrastructure, construction, these are certain stocks which we should definitely look at. The private capex has picked up. The government spending, both state as well as central, is bound to pick up even further from here. So this entire space, whether it's cap goods, infra, construction, building material, is expected to do well for the next 1.5 years, at least till the next general elections. And some of the construction companies who have cleaned up their balance sheet, who have hived off the major assets like the road assets, which IRB has done through an investment in it. So IRB is a clean company, pure focused on construction, solid order book, execution is improving. So some of the companies like this needs to be definitely looked at. I would also recommend buying into L&T. We believe that there is a long way to go from here. There has been a bit of correction in L&T prices. That's a great opportunity to buy L&T and hold for a long term.
Right, hold for the long term. By the way, IRB is about to, it already did, but not quite convincingly. I think, it's flat today. For the month, it's up some 6%. But basically, what I'm pointing to is the fact that it's it's in almost uncharted territory. The earlier high was in 2010. It spent some time around these levels in 2015, then 2018. It's back at those levels, basically. So let's see. I'm talking about a slightly longer time frame. Sudeep, we were just talking, we had Weber Sangvi vendors, and we were talking about the budget is a month away, right? And I think there will be, once this end of the year and the start of the new year, or we get past all of that, will be setting sights on the budget. And markets do kind of treat that still as an important event, at least for sectors, etc. Anything comes to mind in terms of what could be potentially important, what to keep an eye out on, any setups, any trades with the budget in view?
Well, Prashant, a couple of things. One is we just talked about infrastructure construction. I think we will see some action, some announcements in that particular space. Also, remember, probably this is the last full budget before the next general elections. So it is expected to have some infrastructure and construction related announcements. The public spending on infrastructure is not yet adequate, and we expect quite a lot of pickup from here on. The other sector where we have been positive and we think there should be some announcements in the budget is the fertilizer sector. We have seen some excitement in the fertilizer stocks due to multiple announcements or expectations of announcement. But some of these structural changes which we have been talking about, the government has been talking about, the industry has been talking about, hasn't really taken place. And fertilizer subsidy, even today, constitutes a significant part of the residual subsidy burden which the government bears. So the streamlining of this subsidy even further from here on should definitely benefit the sector. To an extent that has happened, but a significant part is still left out. So we will watch out for that. The last part of the budget, which I'll be looking out for, is concrete disinvestment targets. Unfortunately, this is one area where the government hasn't been able to progress in spite of the best wishes and really come out with a thumping success. This is one area where we will expect at least certain streamlining so that some of the disinvestment which the government has been talking about for a very long time does happen. And that should also create some excitement in the market.
By the way, just on that subject of infrastructure, there is a Nuvama report which came out, I think, yesterday or today, where they're saying FY23 to date, April to November, the road awards and construction is down 4% and 7% respectively versus same time last year. So while the street is very optimistic, the data seems to suggest that the awards by the NHAI and the Ministry of Road Transport and Highway MORTH is actually from April to the period of November has declined 4% and 7% respectively. The road awards and the road construction data. That's what Edelweiss has highlighted, Nuvama as it's called now. But do stay on, Sudeep. We need to slip into a very short break. But as we do that, 2022, the year when Nifty Bank outperformed the Nifty as three large banks, State Bank of India, ICICI Bank and HDFC Bank, saw a massive re-rating in their valuations. Abhishek is here. He charts the ups and downs of the big three names in the banking sector.
For the last 2 years, that is 2020 and 2021, Bank Nifty has underperformed Nifty. However, in 2022, Bank Nifty has outperformed Nifty in a big way. So far, Bank Nifty has risen by more than 21% in 2022 compared to around 7% gains that you are seeing for Nifty. ICICI Bank has given a return of 25%, SBI about 32%, while HDFC Bank has given a return of 8.5%. Talking about HDFC Bank, first time in 3 years, in a calendar year, HDFC Bank has given a return that is higher than that of Nifty. Well, large banks have seen massive re-rating in their valuations, the likes of ICICI Bank, SBI, etc. HDFC Bank has its own woes with respect to high valuations getting corrected, which began with Mr. Puri retiring from the bank to now merger of HDFC Limited with the bank, which has not seen much enthusiasm from investors. Let's take a look as to what were the ups and downs of the big three banks in the banking sector in 2022 and what lies for them going ahead. So loan growth. Talking about loan growth, HDFC Bank, ICICI Bank and SBI have all recorded record growth rate in all quarters of 2022. Corporates have started coming back to banks as money market rates have started to heat up, even as retail and MSME portfolio have been the big drivers of incremental loan growth in the banking sector. Strong loan growth momentum has helped the banks with respect to improvement in their net interest margins as well. All the three big banks have seen their net interest margin being the highest in last 5 quarters. The key to re-rating has also been the reduction in stress assets. Talking about stress asset, restructured book, one of the most painful part of the stress assets in last 2 years has been the huge amount of restructured loans. These were loans which were impacted from the COVID wave with respect to repayments. Now, restructured book for HDFC Bank, ICICI Bank and SBI have reduced anywhere between 30 basis point to 85 basis point in the last 5 quarters. Gross NPA. The banking sector has been battling asset quality woes even before COVID impact. COVID only added fuel to the fire and led to higher stress in the system. 2022, however, has been a different story. Gross NPA ratio has declined by 12 basis points on a low base for HDFC Bank in last 5 quarters, by about 163 basis points for ICICI Bank and 138 basis points for SBI, all over the last 5 quarters, improving profitability. Thanks to strong loan growth translating into improvement in net interest margin, along with improvement in credit costs, banks have seen robust momentum in their earnings profile. Profit growth of HDFC Bank, ICICI Bank and SBI have been robust over the last few quarters and it continues to improve. Now, return on asset ratio has also improved for the banks. This can be said as one of the key reasons with respect to re-rating in the valuation multiple of these large banks. Now, ROA has improved by 14 basis points for HDFC Bank, 27 basis points for ICICI Bank and about 43 basis points for SBI over the last 5 quarters. This can be seen in valuation multiple of the banks as well, which has seen improvement in 2022.
What, 80 points lower, so I mean just holding there after an aggressive sell-off that we saw in the last 20 minutes or so, but after that no real follow-through is what we have. Sudeep Bandhopadhyay is still with us and there's 5 minutes to go for close. So just a few names your way. This is Garden Reach Shipbuilding, which is coming under some amount of selling pressure. Do you track it? I think we've discussed shipbuilding companies on the defense side earlier, Cochin, etc. But Kochi does a lot of repair as well, so not a pure shipbuilder in that sense. Your thoughts, if you own any of these names or if you have a view.
Prashant, I have views on this entire defense space. Defense Make in India has given a big boost to some of these companies. Out of that, I think if I have to select, probably I'll go for a Cochin ship. Now, particularly because of the fact it's a very well-managed company with a lot of cash in the books, and the submarine manufacturing which they have started, the contracts they have got is really going to take them to a different level. And so I have to somebody long-term horizon, it's worth picking up. Cochin Shipyard, again, for multiple reasons can be picked up and held. There is also a talk of some amount of divestment and things like that, which may even create further excitement. Garden Reach at this stage, I will be a little guarded.
All right, take that point. Sudeep, a bunch of other stocks also are buzzing around right now as we speak. GIC has moved higher. It's been known to, move higher in spurts and then do nothing thereafter. We have a big move coming in on Affle India as well. In just the last few minutes, that stock has taken a bit of a vertical lift off. Currently at the high point of trade with a gain of almost 4% 6% from lows and 4% in just the last 15 minutes or so. Jubilant Foodworks has been doing well. Westlife Food, which is, of course, the McDonald's franchisor, doing well too. Any of these stocks that you like from this list?
Well, we do like Apple and these, the manufacturing businesses, which will definitely benefit and have been benefiting. So one can look at picking up an Apple or a Dixon. I mean, in the listed space, these are the two.
I think we are losing that line. Sudeep, I mean, the audio is coming and going, so we'll leave it there. Sudeep, thank you very much for being with us. If you can hear me, appreciate your time, technical issues, but thanks very much. 2 minutes to go for close, and we're going to end with about an 82-odd point cut, 80-point cut. So 4 different kind of phases to the market today. A big 100-point plus gap up, then a 250-point sell-off, then a 100-point recovery, and then in the last 30 minutes of trade, maybe a little bit more, another almost 65-70-point sell-off is what we've had. So extremely volatile is how the day has been. You know, beyond the Nifty, what stood out was the market breadth, which was extremely negative. I mean, we've not had this bad advances to declines to advances for a while now. 5:1, 6:1, depending on which group of stocks you want to look at. So that was quite poor. Which means that the broader markets did quite badly. Nifty mid-cap and small-cap indices will come up on your screen. 1% cuts actually on the mid-cap index, and the small-cap index doing a lot worse. 1.7% cut on the small-cap index. So, in a very marked way, the small-caps doing very, very poorly. In terms of other sectoral indices, in terms of the losses coming through in sectors like the real estate index down 1.6, PSU bank index, the pullback, profit taking, whatever you want to call it, continues 1.5 lower there. Metals down about 1.25, and auto index down 1.2% as well. I don't think any one individual large sector was up in the green, all down. Rima.
Indeed, all the Nifty indices were actually in the red. So amid the volatility, the Nifty is actually ending closer to 18,100, a cut of 90 points. Thyrocare saw a sharp reversal, 24% off from the day's high, ending down 11.5%. Sula Vineyards, the new kid on the block, continued to lose ground, ends 7.5% down. Stock 329 on the last stick, while the issue price was 357. Fertilizer names: FAC, Madras Fertilizer, NFL, RCF, down 7 to 8%. Banks: Karnataka Bank, Union Bank, Dhanalakshmi Bank losing significant ground. On the gaining side, you had strength coming in on Ajanta Pharma. There, the promoters sold stake in a block deal today, but the stock saw some buying interest. All in all, a very volatile session yet again. The Nifty ends at 18,100, a cut of 85 points, below its 50-day moving average, and all the sectoral indices ending in the red. With that, it's a wrap and closing well. But don't go anywhere. Our special show, Outlook 2023, comes up next.